first episode of the It's Finance Mates podcast by the Finance Mates. This will be an interesting one, guys. I'm really looking forward to this. So the topic of today will be what financial planning actually is, or like why it is not a thing in Germany. We are the four Finance Mates. We are Alex, who's a financial advisor, has a background in finance and insurance, digital insurance, startups. Kareem has started his career back in the days in banking, also moved to the fintech space, the startup space, has built his own companies before. Augusto started coding when he's 12 years old, self-taught, technical PM, data scientist, with some experiences in cybersecurity. Me, Daniel, I started also in the fintech space some time ago, done some stuff with personal holding companies and tax related things. And now we're all here talking about what financial planning is and why it's great, or why we believe it's great and why we believe it's missing in Germany. So just a quick run on what it actually is for those listening and don't know what it is. In general, financial planning is getting a holistic picture of your current situation, looking out in the future, looking at your life goals, where you want to go and making it happen. It's not so much about you can do this specific thing or this specific thing and leading from that, but leading from your holistic picture. And maybe Alex, you can jump in and give a bit more context around what financial planning actually is and maybe what the difference is, especially for Germany, with financial advice.
Thanks, Daniel. So financial planning, I'd say, is really looking at your current financial situation, figuring out what your goals are, and then figuring out how to get from where you currently are to what your goals are, and figuring out what then is the best opportunity to get from A to B. That I would say is overall financial planning, and financial planning is not something you would do once. But rather something, like if your situation changes, that you should adjust and figure out how to change your financial plan, right? It's not something that's just static. And it's not really something that is very common in Germany. I think other countries it might be actually even a bit more common, but for example, the US and the UK, financial planning, I think, is something that people are very used to. In Germany, I don't think it's a thing so far, like at least not for the broad population in Germany.
Yeah, at least to our knowledge, it's one of the areas in finance that's actually unregulated because only financial advice is regulated, right, Alex?
Yeah, like financial advice is more the topic of sales, so selling products. That is, I would not say heavily regulated, but the licenses that you usually get, they are around selling products, not so much around planning. So you have the certified financial planner, but it's not necessarily the same exactly as in the US, for example, where you really focus on the client, do fee-based financial advice, and just have an everyday client. In Germany, it's I think more about the high net worth individuals that have financial planning, but it's not necessarily something that is very common. It's really the sales part that is predominant in Germany.
Yeah, when we started looking also like into the whole topic of finance mates, it's actually crazy, like just the German market, like how much financial advisory is just so dominant, not really also allowing other sort of models to fully emerge. And it just seems that like also the market is so used to it. I mean, there's like this really, really big lobby as well. I think even on an EU level, the German lobby blocked banning commission-based sales across the entire EU. Spent many years actually lobbying for that. To maintain that market position. And yeah, it's just a very interesting dynamic. I think, when we first started, like I read this book, very exciting book, The History of Financial Planning, Transformation of Financial Services. In the US, it's probably the most established market for financial planning, right? As with most things, the US seems to lead the way in innovation. It's especially customer-centric innovation. So like already from the 70s, I mean, there were some pioneering guys in the US who also used to be financial advisors, and just didn't want to like sell these terrible products to their customers with these super high fees. So came together and started a movement that actually led to the foundation of this like CFP certification, so Chartered Financial Planner. And I think what was really interesting there is that actually wasn't a regulation change that actually sparked that movement, but rather customer demand. Like once they started really talking to people in this new way, like really going through their life plans and like trying to figure out where they are today, what their goals and ambitions and dreams are, and like how to help them get there. Firstly, it's just way more rewarding as a financial professional to do it that way and not be seen as a salesperson. But I think as soon as the market started getting exposed to this type of consultation, the market really started to demand it and didn't want to deal with sales-based commission sort of style conversations. And that's what I find really interesting. And I really think that Germany is ready. I think expats also is kind of our main target market, and like maybe have a little bit more of that orientation already, like especially if they come from the US, the UK, or some of the other countries where it's a bit more predominant. So yeah, I think it's also just about time, to be honest.
That's a good point that you're mentioning with like the expats. I think so for those of you who are sharing, like there's two, let's say, native Germans sitting here, Alex and myself, and two expats, Augusto and Karim.
I have a German passport now, though, so I'm.
You have a German passport, but you grew up outside of Germany.
Yeah,
studied elsewhere. So I would count that as an expat. Obviously, so maybe you can also speak about like your experience when you first came here, because yeah, you come from Egypt and Argentina, and like your experience with that is sort of also different. Karim, especially educated in the UK, so financial planning has been more of a topic. I don't actually know how it was in Argentina. Like, is financial planning a thing there, Augusto?
Argentina is a very weird market. It's a place where holding cash is considered an investment, because if you have dollars or euros, like their value keeps going up because our currency is, for most of our history, not very serious. So it's a very underdeveloped, I think, in the recently we're starting to see a lot more, especially it's one of the countries where crypto kind of found a very fertile market. So you have this contained demand, like this pent up demand for financial products, for investing, and suddenly crypto appears, and actually Argentina is one of the highest adopters of crypto. I don't know where it is in the leaderboard, but it's definitely punching very high above its weight in that market, because it's the traditional finance market is a lot less developed. But yeah, forget about financial planning. Like I know, with this number of people that have financial advisors, that have investment advisors, mostly asset managers, and not particularly wealthy people, but like very financially savvy people. So it's like probably like the top 10 percentile of financial knowledge. And for most people, it's just like buying dollars, buying euros, and putting them somewhere safe. And so
you mentioned sorry to interrupt, but you mentioned like asset managers, financial advisors. Like we're throwing around a few words. Maybe for those who are not super familiar with those terms, maybe you can quickly explain the difference, because sometimes they sound the same. Who wants to go and explain the difference between asset manager, financial advisor, and a certified financial planner? Alex, you want to go?
Sure. Like an asset manager is somebody that takes your money and does something with it. Like it's managing your assets. So like a financial advisor, usually, or how the term also is used in Germany, somebody that sits with you at your kitchen table and is figuring out what products for you make sense to buy for like a pension insurance or like those kind of things. And a certified financial planner in that sense is somebody that really sits down with you, understands your current situation, your goals, and really makes a holistic plan, right? It's not just let's look at one risk, for example, like your partner might die, so let's get you an insurance for it. But rather makes a holistic plan for you and you pay that person. I think that's also an important part of it. So it's normally fee-based. And from an interest point of view, certified financial planner would be more somebody that is on your side, you're paying them, they figure out what's the best for you. Financial advisor is a bit mercury, right? They probably on your side to some degree, but usually they earn a commission. So they also have an incentive, and oftentimes they're even in Germany hired by like an insurance company. So in that sense, they're not even working for you, they're working for the insurance company, representing the interest of the insurance company and just selling your product.
I just wanted to come back,
Yeah.
sorry, Augusto, to Argentina, actually. I mean, I was on holiday there maybe like, 3 years ago, something like that.
I have some memories of that. Yeah.
Yeah, it was pretty fun. But honestly, like just the economic state there was so interesting. Like depending on
Right
if
on.
you withdrew money from an ATM with your normal credit card as you do everywhere in the world, or if you used some hack through Western Union to transfer money somewhere, you literally would double the amount that you get.
Yeah.
So it was bizarre. We used this like hack, right? Like the Western Union hack. And it felt like everywhere we went, like the country was on like 50% discount.
It is. Yeah. I have my favorite story is one friend of my dad who's a like small business owner was telling the story of once having to buy dollars to pay an import, like an import situation, like he was importing something, and he went downtown, like at the center of the city of Buenos Aires, to an exchange house, which is called a cave, like a cueva, right? It already like that already sounds sketch, that's like, oh man, this is gonna be fun. And he goes into like this super tiny office with like like a lowered ceiling, the one that has like squares. This is gonna be important, squares of like plaster. And he sees one guy behind a glass, and there's no way to get to the guy. And he's like, I need to exchange, I don't know, whatever, 4 trillion pesos or like $10. And he's like, sure, yeah. The guy behind the window is like, 4,000. The ceiling opens and a basket comes out. And this is the context where like I find it. I don't want to go into crypto too much, but like this is the context where I don't know, a lot of very normal people with like not your typical crypto person was like, hey, I can put my money instead of like under my mattress into magical internet money. Yeah, cool.
I think it's an important. I'll let you go after. I think it's an important point that you mentioned, especially these days with like all the content that's out there, like different businesses, startups trying to carve out their piece of a market by doing one investment product. A lot of people like come from different angles.
Yeah.
One come like, oh, like ETFs are great. One depending on the crypto people, then there's the real estate people and stuff. And with this individual mindsets that you have in Germany, also people then maybe get stuck in that like silo without actually looking at their holistic picture and comparing all of them.
Yeah.
And that's also what financial planning, ideally, in our view, should do. Right, you look at the whole picture and say, okay, what sort of asset classes are out there? You've maybe heard of all of them. Maybe you've heard of one of them more because your Instagram feed is full of it.
Exactly.
But nailing it down to like this holistic picture, and then taking it from there to see what actually fits you, what fits your situation, and especially as an expert, when you like your life's a bit more dynamic, you don't really know where you're gonna be in 5 to 10 years, when to move home, move to a different country and stuff. So these are all the factors that I missed out in that like general educational scroll. That's it.
But I
Yeah.
think that's exactly like the point for me, and like why it was so confusing when we started looking into this market, like why financial planning doesn't exist in Germany. Because Germans are planners. Like Germans are planners, you know. Like
But-
you hear like the stories like about Argentina, like how can you plan like your finances in an economy like that? I mean, like also for me,
if
like-
inflation is 100% yearly,
yeah,
what can you
exactly.
plan?
And also for me, I mean, growing up in Egypt, like was
Oh, yeah.
also quite an unstable like economy. Like we've had like mad inflation like over the last like 10 years. Very unstable also legal system and these sort of things. I think
Inflation
like
matters.
yeah, exactly. And I mean, actually, like people don't do formal financial planning, but I would say, and maybe this is common in other cultures as well. I mean, I know it is across the Middle East, but financial planning is actually family.
Yeah.
So you sort of rely on the idea that like your family will have your back. And then like families sort of like together buy, you know, like family real estate and sort of secure their like financial future through that. So that's like a complete different way of doing it. But I think these sort of mechanisms emerge in like economies where there is no stability. So people have to take stability or creating financial stability on themselves. And that's why like it was really confusing to me, like in a country that's so stable, so bureaucratic, so planning oriented and organized like Germany is, how does financial planning not exist here, right?
Yeah, or
Yeah.
how is it like?
I-
It's so. I'm pretty sure that if you start looking and like look really, probably you're gonna find one or two persons, but like it is essentially not the first thing you do.
Alex is to jump in.
Yeah.
Let him speak, guys.
Go
Yeah.
on. Yes.
So like I just wanted to say like why I think Germany or how Germany developed over time and why we're in this situation right now. But before that, I also saw think it's interesting that having it the mindset of expats versus Germans. Like a lot of our clients, especially Middle Eastern or Indian, they have a very different mindset. They do have oftentimes a decent salary. They have a lot of cash and security, and they still save a lot more. They put a large like they don't have this lifestyle creep that I see with a lot of Germans, and I think it's exactly because of that, right? We have stability, you have security. You think there is gonna be a pension. At least our parents had one. So you have unemployment insurance. You don't have those safety nets in other countries like the US or like let's say India, probably also not Egypt or even Argentina, right? So
Definitely.
in that
I mean,
case-
you have a concept
Yeah.
of retirement, but it's funny. So no, it's not there.
well, I'm super interested. I was gonna ask you that anyways. Like, what's
Yeah.
the concept of retiring in Argentina? Like before it.
Yeah. Do you want me to answer now?
Yeah, like
Oh
maybe
my
just
God.
if it's a short
Yeah,
answer, like
in
if you want.
Argentina. So we used to have the same system we have in Germany or Switzerland, which is you have a split system. You have a public and
Yeah.
private. In Switzerland, we call it the Säule 1, Säule 2, like column 1, column 2. Which I think the Swiss system is fantastic. I love it. Argentina used to have that. And during the first Kirchner government, they decided to nationalize the second, like the private ones.
Great.
And so now you only have the public one. And the public one is the typical Kasse system, the typical like money in, money out, like
Yeah.
current active pays for retirees.
Yeah.
So I don't know. My parents are making are both kind of retired now, but they still need to work. Like it is hilariously low what they make. Having contributed, I would say, decently in the middle, like in the middle of the income range, they are making like below poverty in retirement money. So everyone I know in their generation is in the same situation. So it is.
Everybody needs to work.
Yeah.
I mean, that system works.
Egypt is the same, yeah.
Yeah.
Like Egypt is the same, and I think like if you only really get like a pension if you work in public sector, so like or army or some affiliated sort of like public sector job, and that's why I was like 5 million public sector employees because like it's sort of like a way to actually secure something, right? If you don't have that, then no, it's on you. You make your own money and you pay for yourself in retirement, and you better hope that you have like living family when you're old. Otherwise,
Mm-hmm.
go to the streets, right?
back to this idea that your family is your support system, right?
Well, like it's in that extent, like the state in Argentina and Germany is replacing that a little bit. It's just like a larger family in that sense. But it's the same model,
It's
right?
the
Like the
intention,
younger pay for the older ones. You're just a bit screwed if like all of a sudden there are not enough children, right? Like in that case, like you just yeah. Like
Both of us
just
have
fucked.
that problem. Yeah.
Exactly. Yeah, that's like, and in Germany, I don't know how it is in Argentina, but in Germany, the public pension is just slowly declining. And I mean, people talk about it, it's in the news and so on, but people don't feel it because it's so slow.
Yeah.
Like it's just like the increase doesn't keep up with inflation. So
Yeah.
meaning like people think they're getting more and more pension over time, but it's less than the
Yeah.
devaluation of money. So over
Yeah.
time, it's just going to be less money
Yeah.
that you have available, which
Yeah.
in 30 years from now makes a huge difference, and people don't see it. I mean,
Yeah.
they're being warned, but since it's not an emergency right now, a lot of people don't think they need to do some or don't feel the urgency.
It's also hard to feel it, right? Because how do you feel something that's like 30 years out or like 20 years out or something? It's very weird. Yeah, go.
No, and also how do you feel something that is going to be new to your generation? Like for me, for example, like when I moved to Germany, I came with the idea that I need to make my own savings, my own retirement. I once remember like year 3 of living in Germany, I calculated my retirement, and I was like, oh, that's actually neat. Good addition to my future planning. But I was like always saving, assuming that I'm going to be on my own.
Yeah, same.
And like because in Egypt and Argentina, this has been historic. Like this is something that I'm seeing my parents and my grandparents going through. So it's like I know that I conceptually in my head, even though I'm in a different country, conceptually I'm like retirement is this thing that maybe gives you a couple cents. If you're going to be the first generation going through this, like actual, your retirement just doesn't make it for you. It's hard for it not to come as a surprise unless you're actively thinking about it.
Yeah, I mean,
Yeah.
Alex also knows, like, I mean, after like 2 jobs ago, I guess, like I took a bit of time off, like to look at like different business ideas. And Alex was like, oh yeah, like, okay, you're unemployed, dude. Like, why aren't you taking unemployment insurance? And I had like just a huge like mental block like around it. Just because like I was like, no, but like, I need to look out for myself. Like I
I
don't
have
really
the same, dude. The exact same. Like the first time I was eligible for unemployment, I had the same like, should I apply for it? Like I have money. I'm draining like state resources for my own like.
Yeah.
Paid into it, guys. You paid into it.
Yeah, I was gonna say it's an insurance. You pay into it. It's like you left a lot of money on the table, Karim.
Like for me as well, like it was such a like. It was a mental block in the beginning. I was like, I feel like it felt unethical. Like I've always thought of like this kind of insurance as a social benefit. Like you save,
Exactly.
you actually need it. And I was like, I have savings. I can maintain myself. Like, what am I doing?
Two things. They're two different things, right? One is unemployment insurance, and the other one is the social welfare, essentially. And for a year, you get your unemployment benefits that you also paid into it.
Yeah.
And it's like any other insurance in that sense, right?
Yeah.
So it's a different story, I think, if you fall on the social welfare net, but unemployment insurance. In the end, if you don't take it, it depletes your savings, right? Like you end up in a situation that makes it more difficult for you actually to get out.
But this is the interesting, like for me, the key thing to highlight in this conversation is like the interesting like different mindset and how that affects your financial decisions. That the situation we are both in, like all of us four, well, me right now not, but for a long time we all lived in the same country, roughly the same financial situation, I would say, plus minus some percentage, and yet you see like Karim and I come with like a completely different personal background, and we think about it so much differently, even though it's like factually the same thing almost.
But I think this is exactly like the point, right? Like if you're an expat living in Germany, like ultimately there are cultural differences. I think that actually can give you an edge, right? Like in some things, but in some things that you also are just a little bit blindsided on like what's actually available and what you can do in the German market. And yeah, I think that's actually where the planning process really makes sense. Like because even for me, like second time around, I took the unemployment money very unapologetically. I mean, it really helped me, honestly. It gave me a lot of security. And now, we're doing a lot of stuff, starting businesses. And so,
Mhm.
I'm
Yeah.
glad I did it, right? Like, but it
Yeah.
took like a big like mindset shift. But honestly, now looking back, like what I probably should have done, even if I felt I didn't want to spend the money, I had my savings, whatever, I should have probably taken it, put in it in ETFs, right? By now that would have grown into my portfolio and could
Yeah.
help me in retirement, right? And
Yeah.
alleviate some of that pressure.
Yeah.
And yeah, I think if I had done a maybe more formal planning process or
Mhm.
had actually some external sort of input on my plan. I mean, I've studied finance, I've worked in
Mhm.
banks. I always thought of myself as someone financially relatively savvy. But still I make the mistakes, right? Because when it comes to yourself, it's
Yeah.
emotional. It's not logical.
For sure.
Yeah.
I mean, I find it hilarious you mentioned that, because like we were doing our financial planning with my wife, who's been working in finance for forever as well. She's like an actuary, has been working in for all the like the big ones in Switzerland, and we still find that we both are making the same mistakes. We're like, oh, in terms of like perhaps thinking about investing, exactly as you were saying just now, like something as obvious as like, if you have free cash flow, put it on something that's going to grow, low interest. But the feeling of like, oh, I have that money locked up, like what can I do with that? So that for me, that's also an area where like, even for us that are have experience in finance or have the benefit of having someone in our lives who has a lot of experience in finance, it is still good to have like
Neutral third party.
a neutral third party, exactly.
Sorry,
Someone who
partners.
helps you think, almost like a coach, I think.
Yeah, like keeps it calm. Like I mean, we probably also all have stories where we like like did things like not taking unemployment money because we felt like it's not ethical, or we
Yeah.
don't, or fear of missing out, and just were like, hey, let's like seeing the Bitcoin. Yeah, yeah.
I am guilty of that.
I mean,
Um,
I mean, for me,
yeah,
it actually was yeah. Daniel,
Yeah.
back to you.
I just want to come back quickly again
Yeah.
because I didn't want to interrupt anybody, but since we have been building a lot of like calculators into our experience, it actually is even clearer to me how like big that pension gap can actually grow. Like it's pretty insane. It wasn't really that like, sure, I thought, yeah, I'll definitely get less, right? And it's going to be quite substantial, like maybe 20-30% or whatever. But that's only the best case if you like working in Germany for 30-40 years. If you work in different countries for like a couple of years, every like, I don't know, you switch every 5-6 years.
Or freelance for a bit and don't pay.
You freelance for a bit, you don't like pay into it actively yourself. Like then, like it's gonna be way less. So that like building the calculators actually also increased my awareness a lot about that topic also.
Yeah.
My experience with talking to our clients here is that they are like, yes, I mean, the big issue is the fragmentation, like that, they pay in a little bit here, they do company pension here, and then they just end up with a lot of products. That's one part of our clients. The other part really just puts all the money in the bank account because they feel like they're moving around so much. They just keep it in cash, and it doesn't have an opportunity to grow because they're just like, hey, I don't know how long I stay. Oftentimes that's actually the situation. Like after 5-6 years, when they actually contact us, it's like, I wasn't planning on staying in Germany that long. I'm still here. I might as well just start planning. So just in case I stay here for another 6 to 10 years. But a lot of them actually do keep either cash at hand, or they try to invest it everywhere they go, and they end up with a very fragmented portfolio. In either case, what they're lacking a bit is the financial planning part, right? Like they're not necessarily, they know they need money, and similar to Karim and Augusto, like the two of you, they think of themselves as like having to be responsible for their own pension because they're not counting on any state subsidies or pensions or whatsoever. So they do the investment for the future, but they don't necessarily know how much they will need, right? There's
Mm.
no like, this is the amount for me to live comfortably, and this is how I get there. And sometimes they're completely overshooting. Sometimes they think they're okay, and as Daniel said, the gap is still huge. And one thing I also see is like if you wait very long till like you actually get around to piece together the pieces of the puzzle, you just don't know, right? And oftentimes you would even leave like money saved away in some bank account in the UK because you worked there for a couple of years and you don't even have that information. You don't know how much money is there. You don't know what the money is doing. You don't know if it's eaten up by fees. Just because like you didn't actually make, or a lot of people don't make the effort to figure out what they have and how to get it in the end. Because also with the Deutsche Rentenversicherung, they're not just paying out. You have to tell them to pay out. And you might get
course.
80 years old, and if you haven't been like, hey, you owe me money, then yeah, like they're not just gonna like come knocking and be like, hey, take your money. It's like no, like, but it makes sense to have a plan.
Yeah, it's pretty
crazy.
I mean, I think we can do like 5 more episodes just about the German pension system.
Yeah.
I mean, it's like a whole big mess, I would say. And yeah, actually, like something you told me recently, Alex, really got me thinking, is that it's the pension system especially is so tied to politics, actually, right? And at the moment, like because of the population demographics in Germany and having such a aging population, especially in terms of the voter base, politicians really just make decisions on the pension system based on current pensioners and not future pensioners. So it's a short-term bet, basically, on I want to be in power now, not like in 30 years. I want to be in power now. So if I want to be in power now, whatever current pensioners want, I'm going to do because I'm going to get their vote, right? Older people are also like usually have the highest voter turnouts, from any population demographic anyway. I think this is a global thing. But I've seen stats on that in Germany as well. Anyway, very interesting stuff. I think pension is a whole like big topic. But yeah, definitely a big part of planning. I mean, should be anywhere, but like, I mean, especially at finance mates as well.
Do you know how many pensioners there are in Germany?
So German population, what, 85 maybe million, right?
Should be like
Pension.
7 million, 8 million.
No, I'd say more. 15? Maybe?
Daniel?
I'd say between 12 and 17.
It's about 20 million.
Ow.
20 million. About 20 million people, and then as Karim said, super high voter turnout. So just in the last coalition that we had in Germany, SPD, like and CDU are usually the parties that get almost all their votes, like a large part of the votes from pensioners, and SPD pushed through that at least for the next foreseeable future, pension stays the same, so it doesn't decline much. Guaranteed pension. So they really, they're fucking up like the future or the pension system. They're just spending all the money now, which isn't available, or like they're spending money that is not meant for pensions, right? Because how the system works is that you're paying in right now if you're like from your salary if you're employed, and the money goes to the pensioners. But at the moment, 1/3 of the money that pensioners receiving comes from like taxes, and that share is going up.
Yeah.
So like instead of pension declining at the moment, we just subsidize it with everybody's tax on top.
Something else. My God.
The other topic with like we're looking more into the future. I think if you're also like us, like millennials or in that age range, there's like the two extremes where like Augusto growing up in Argentina, inflation, and it's like something crazy and it can really screw you basically.
Used to it, and now it's
exactly. But if you're
like bread is $1,000, it's like what? Yeah, it's $1,000 now. Like that's okay. €1,000 for bread. I guess that's normal.
But if you grow up in Germany, or like anywhere Europe, more stable economies, maybe let's say, and then there's like this magical 2.2% inflation that's like the target and whatever, right? It really creeps up over the years. Like the compounding effect of that in terms of real-time prices is insane. Like and especially I think after COVID, this really got to people now. Like now people really feel it because we had like much higher rates for a couple of years and it just accelerated. So now suddenly your flat white with oat milk in Berlin is like €5 instead of like 350, right? And that's pretty insane, and that's just gonna grow. Like
Yeah.
it's not gonna turn negative at any time soon.
Let's hope it doesn't. 'Cause
There's
inflation even more scary.
yeah, there's plans from like the US to get more money into the market. There's plans from Europe to put more money into the market. So that's not gonna
Germany
go
is
down.
bad now. Yeah.
And and these like 2% every year. Like if you make 2% more returns on the ETFs every year, you're gonna be very happy. If you make 2% less, uh, or if you have 2% more spending on every like lifestyle item of choice in your daily life, then that's also gonna be major.
Yeah.
And projected that 20, 30 years out, it can be quite scary if you don't plan for it. And that's why also Alex said like most people don't have a picture. Clarity really is number one. Like clarity
Yeah.
should be the first thing. It's the first thing in our process too. Is like
Yeah.
what's happening, what's your status, like where
Yeah.
are you? Because if you don't have the clarity, you also feel like paralyzed.
Yeah.
Well, I mean,
That's a very important part.
I think that like the inflation poison is super important actually, and like I mean, people generally have amnesia and think that history never repeats, right? Like, but I do remember I love history. I studied history at school, and I remember like in my like textbook or whatever, like seeing photos of like Germany in the 20s with people with the wheelbarrows, like Deutsche Mark, and like that is increasing so much. So like Europe is not immune to inflation, like obviously, right? Like no country or continent is. But I think like also coming back to planning, because I mean like just planning itself is not going to protect you against inflation, right? Like just having a plan there. And we've seen actually like even some of the people in the market who do actually do planning, which is a good development. I mean, we're quite supportive of that. Also would maybe sell you a plan for some €1,000, do very detailed like analysis and create all of these sophisticated models. And then it's like, okay, here's your plan. Now go do it.
Yeah.
It's good, like to an extent, if you do actually do it. But the thing that protects you against inflation is not just the plan; it's the plan executing the plan and really following through, right?
Yeah.
Like, and I think that's the important part, like because planning is not a static thing. Goals change, life changes. You know, maybe you have kids, maybe you want to move, maybe whatever you want to do in your life, right? But taking sort of those small steps along the way, actually starting to invest in ETFs, not just like writing it down on your to-do list every year for 5 years in your New Year's resolutions, right? Or like maybe actually buying real estate, having like proper physical assets. All of these sort of things like ultimately accumulate, right? And then when you do come to retirement age or when you need liquidity, you need money because stuff happens, like you get sick abroad, or you want to like buy a boat, because some people want to do that.
Crazy people,
Yeah. So
yeah.
So
Actually, like what most people forget, exactly what you said, having goals, right? Is super important in financial planning, because you're saving money, right? You're investing money, but what do you do it for? And that's something most people answer with like building wealth. But then the question is like, for what? Because when do you need it? For what do you want to use it? Because otherwise, like the usual question is like, hey, I'm thinking about real estate, or I'm thinking about this or that investment. What do you think about crypto and stuff like that? In my opinion, it's the wrong question, right? Like before you can answer that, exactly, what for? Like if you're, you plan to buy an apartment in 5 years from now, well, let's say in 2 years from now, putting everything in stock ETFs or Bitcoin is probably not the best choice if you really want to be able to do a down payment for an apartment in 2 years from now, right? Or you want to have a family, start a business. In that case, yeah, like you're actually looking at something, maybe even like having it in terms of like cash on your bank account for a couple of years, just to be sure that the money is there. And forget about the inflation. Might be a much better choice, and like putting like really the goals first and being okay, I know where I'm right now, I know where my goals are, and then figuring out for each goal what is an ideal investment opportunity, right? And what options do I have? Okay, I can get a pension insurance. Is that right for me? I'm leaving the country. Like then you can answer all those questions, go in depth, understand the products that you have available. Figure out if you want to buy a house, what happens to the house. Are you gonna have children that inherit it, or are you gonna sell it? You're gonna, live rent free. All those things you can then figure out and make part of your plan. And as Karim said, like things change also, right?
Yeah.
Like maybe in a year from now, you move somewhere else, have a different job, income, have a partner, have kids, lose your job, are unemployed. I don't know, like bring over your family from Egypt and having to take care of, I don't know, like things change, and your financial plan should
Your
also
plan needs to adjust.
Yeah, exactly.
I would love to see, like, not now because it's kind of hard, but like would be nice to see like what that looks like in practice. Because I feel like a lot of this is when, especially when doing like interviews and user research, kind of as we were getting into this space, I noticed there's a very common pitfall that is the lack of action. The one that like Karim was talking before is like putting ETFs on your to-do list and never doing it. But I feel like the bigger problem that financial planning solves is like having a proper structure to what you're doing. You have the the realization that that inflation exists, that your pension is not going to cut it, and you suddenly realize this in 2021 when everyone else did. And it just so happens it was like the peak of the longest bull run in the history of the longest positive upwards movement in the history of the stock market. So you find one of these like low fee investing apps and you say like, oh, I can invest. How do I get into this? And then some influencer in TikTok tells you should invest in options, why? And you invest in options and you make some money because everything is going up. So of course you make money. And now not everything else is going up anymore. And I feel like a lot of people went also through that. Like there's an archetype of people who went through that process and have some sort of investing done, but it's not really investing. It's just like buying random assets. And exactly what you're saying, like, what percentage of my assets, what percentage of my investments should be super risky, like, 100 million volatility stuff that I cannot probably access for a year because it's down 40%, like Bitcoin likes to do every now and then, or let's not get into other cryptos.
I would say, to answer your question, like it would be the same amount that you'd be willing to take into a casino right now. I mean, that's basically what you're doing, right? So,
I mean, if you're investing in out of the money puts on Tesla, yes. So it's literally a casino, unless you're like a quant trader.
Right.
But in like, it's exactly, it's like money that you would say like, a percentage of money that you can like live without.
and that's fine, right?
Take that, that bet that maybe it goes up. And it applies to other like less speculative things as well. But then how much should you keep in something less risky? And I think it depends, right? It's that like someone, people try to give you recipes like, oh, you should have like 10% in crypto, 20% in like whatever. And it depends. Like if you're single, you're 25 and you're making a truckload of money, maybe you can have everything in crypto. Who cares?
Yeah.
This is not financial advice. I'm not your financial advisor, person reading this. Don't do what I say. Watching, not reading. And it depends on your situation, and your situation changes. Like just recently, myself, for example, I went from like in the last 2 years, I went from a very, very risk on portfolio to mostly cash, because I had a kid and I moved to what The Economist calls the most expensive city in the world. Which I can confirm it is. Very worth it, by the way. Zurich I love it. Totally worth it.
Your bank account doesn't, but sure.
My bank account is crying every morning. It calls me like, dude, what are you doing? No, for real. It's so yeah, like this is an example. My life situation changed. I had a kid in Switzerland, and then like, okay, I need to adapt, and I'm also building a company, so cash flow is less predictable than if you're working for UBS. So my investment portfolio changed significantly, and I think that this is this is what excited me about, honestly, like coming on this team is like, this is what I think people need. It's not like recipes or not like fancy apps that let you invest, like gamble on like out of the money options you don't even understand, or if you do, maybe you kind of understand, but like options are super hard. Kareem can tell you more about it.
I'm gonna take it from here. Otherwise, we're gonna go into the options rabbit hole. Knowing you. Let me chime in. But to reflect on that, I think you're very right. Or like to summarize it a bit, what we try to say, I guess, in the last 5 to 10 minutes is, especially as expats, life's very dynamic.
Yeah.
And there needs to be a planning process that also can be dynamic, or is dynamic, is forward-looking also, looking at your goals, and that's like where the German industry at the moment comes in. It's not like something static that kind of is built on the premise that you are going to be here for most of your life or for all your life. You're going to work for 30 years, like all these employer insurances, like pension insurances, like the stuff that's going to be sold to you if you look into it, has that underlying idea of you as a person staying here, coming from here. It's not really expat friendly at all. So like times have changed. We're in a much more dynamic global world. You need assets that reflect that, that have flexibility. And I think that's what the planning process can provide versus going out there and like go for individual hunts, I would say.
Yeah.
No.
There's also order to it, right? Like you start with, for example, looking at your debt, like see if there's if that makes sense to pay it off before you do anything else, because it has some inherent risk. You can default on your debt. Looking at the interest rate, under conditions, exactly. Then, checking out your savings, right? How much money do you actually need in your bank account? Like, what are your dependencies? Is somebody dependent on your salary? Like, you have to service the mortgage. Like, can you default on that? Like, and then there's no point, for example, in paying off your mortgage if you don't have any savings, and if something comes up, right? Need an expensive flight to, go home to see your family members. You don't have any savings and you need to take out a new loan. Doesn't make any sense. So savings super important, and only then moving to investments. And like I myself, like I made the same mistake as a student. I was like, why would I just put my money in a bank account? Like I just put it in ETFs, and then I didn't have enough savings, because I was like, I'd rather want to have I don't know, a decent return on my stocks and having 1% in my bank account. So I put almost everything in ETFs, just hoping that if I need something, the market's going to be all right, so I don't have to sell it for loss. And then of course, like my first apartment, getting the down payment, 3 months 3 months rent, renovating it, the movement. I got lucky because I got to sell it not for a loss. I made a decent return on it, but I just got lucky. It could have been the other way around, like financial crisis, take a 40% hit, and
and you don't have
definitely not the right investment for my situation. But yeah, that's the benefit of having somebody that is gonna be a bit more calm and from the outside looking at you in the sparring spot and be like, Alex, like, are you sure you want to put everything on ETFs? You might need that money. What is how much money do you actually need in terms of saving?
Okay, guys, I think that's a great point to wrap this up. To say, risk tolerance and forward-looking emotion and maybe a third neutral party, we called it earlier, is very important in the planning process, because you're in the weeds daily. You think about things much more emotional than a neutral third party does, and it's very important to have that reflection. But yeah, that's let's wrap it up. Maybe if anyone has one final word, I'll hand the microphone over to you. Otherwise, I'll have the last few sentences, and then we can close this first episode.
Thanks for hosting us, Daniel.
Yeah. Pleasure to hang out with you all as always.
It was a lot of fun.
Nice. Okay, guys. Until next time. Was a lot of fun first episode, and let's see if you guys who are listening, if we have any listeners, let's see. We're doing this for fun as well, as Augustus said. We're just here having a chat. Then yeah, check us out, financemate.de. If you're into financial planning, we have like some free resources for you to check out, or just hop on a call with us. Yeah. Until next time. Bye bye.